Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Get by the website today, realinvestmentadvice.com, to get our latest blog post out today on why margin debt confirms that March was actually just a correction and not a bear market. Now, this has important implications because when we talk about actual bear markets, we're talking about reversions in valuation. We're talking about getting stocks back to reasonable price levels to make long-term investment decisions. But that did not actually occur. During this decline that we had back in March, yes, it was large. It was 35% decline, but we did not break the long-term trend of the market, and we also did not revert valuations or clear margin debt, which has implications going forward that another large correction is still possible because the fuel that provides the catalyst and the support for a bigger correction still exists. And margin debt has now risen back towards some of the highest levels in history. So yes, the markets did break out to an all-time high. Now, this is what we expected. We talked about this a couple of weeks ago in our newsletter, that if the market broke out to an all-time high, this would confirm, by the way, that this correction was indeed a correction, and that's exactly what occurred. We said that if the correction was resolved by new highs within a few months, then that would confirm the correction was over. And the correction that occurred in March is now over, and we've had this very nice advance here as the market did break out to all-time highs last week. Now, the deviations from long-term means are still getting very, very extended here. And these deviations on a long-term basis don't tend to last a long time. And particularly now with money flows, we had an acceleration in money flows in the markets here over the last really couple of months. Been a lot of exuberance about chasing stocks, getting into markets, a lot of pickup across really kind of the media speculation as well. That's really kind of driven the advance here. But we're starting to see a deterioration in those money flows here, and we're close to triggering a money flow sell signal as we move into the months of September and October, which historically, leading into an election, have been tougher months, right? It doesn't mean you have a big crash or a big correction, but they tend to be sloppy, and you tend to get more of a kind of a sideways trading action as well. The expectation is that after 5 straight months of advance, and that's what we've had, is that it's likely we're going to see at least some type of consolidation, correction, a little bit of relaxation in the markets to provide a little bit better opportunity to position in portfolios over the course of the next couple of months. So this is why, in particular, we've now been looking at raising valuation in our portfolios. In other words, buying a little bit of value, reducing some of the momentum-driven plays, pulling those profits in, starting to reposition, add a little bit of fixed income to portfolios as well. If we take a look at bonds as opposed to stocks, we see a very different picture here. Bonds very oversold here at this point, looking for potentially a rotation there, money coming out of stocks, moving back into bonds for safety. Also take a look at the dollar. The dollar continues to find support here and holding this bottom, and we are starting to see some support building here for the dollar, and there's a lot of expectation the dollar will only decline from here, but a correction in the stock market will likely put money back into the dollar, back into bonds. So again, looking at those as potential risk hedges for the portfolio short term, and focusing on risk management, because markets on a variety of fronts are very, very overbought, very, very extended here on a daily basis as well as on a weekly basis. And on a monthly basis, we're seeing stocks extremely extended on the upside in terms of overbought conditions. So again, just pay attention to the risk. I'm your host, Lance Roberts, with 3 Minutes on Markets and Money. We'll see you next time.